Oh boy, guys, it's about 12:40 p.m. on the East Coast right now, and let me tell you, the selling has gotten worse. The Russell's down 2.4%, the Nasdaq's down, and the S&P, they're both down 1.4, 1.5%, as we have the Dow down 1.2, and the mighty old VIX is up almost 9%. So in this video, we're going to break down the markets. You guys know the drill, and we're going to talk about stocks that I'm looking at, a couple here that I believe are oversold. So if you all find value, hit that like button, subscribe, take a sip of your coffee, and let's just dive into the video, guys. Let's not waste any time. So like I said, we're selling off all across the board, and there's only 4 stocks on my watch list right now that are green. We have Humana, we have Alibaba, Activision as well, which we talked about in my previous video. Go check that out after this one. And we also have JD.com, which is the most green stock, which is up about 1%. So it looks like Chinese stocks are doing decent. I mean, Baba's up a quarter, JD's up 1%, but for the U.S. stocks out there, they're not looking good whatsoever. We can see SPY and Triple Q. Both of these have been downtrending in the pre-market throughout the entire day so far now, intraday, and it looks like Triple Q is going down, maybe potentially to retest that low from Friday morning, which you guys can see. Triple Q got the 286 after we got the jobs data for November, and look at where we are now, 288. It looks like that is where this wants to go. We did fill the gap back up on Friday. If you guys remember, we lost a bunch, like I said, in the pre-market from the November jobs data. Then we filled that gap back up. Bulls had a pretty good intraday on Friday, but now, again, they're giving it all back again, which is not good. It's not a good sign, to be honest, guys, in the very short term. And you can see the same exact thing going back to SPY, right? We're giving back all the gains. The low from Friday pre-market was $400.01. Now we're at $400.63 as I'm making this video. So it looks like we could be testing those Friday lows. And if we do break that point, going to the 20-day chart on these ETFs, guys, one tracks the S&P, the other the Nasdaq. You guys know that by this point. If SPY starts breaking under 400 and then 395, 393, selling could start to pick up from there. It really could. That'd be a technical break for the bulls. That would not be good for the bulls. And if Triple Q were to come down 280, 278, we start breaking those points, that would not be good for the bulls at all. So what do you guys think? I mean, are you leaning more towards bears coming in now? We're going to get some selling, even though the technicals aren't 100% confirming that quite yet. Are you in that camp, or do you think that bulls are going to come in, buy this up, and start running it back up 400 plus SPY, or 410 plus, 415, 420? What do you guys think? Let me know your thoughts in the comments. And if you haven't gotten your 15 stocks from Moomoo or your 12 stocks from Webull, use those links down below. Deposit at least $100. With Moomoo, you get 12 or 15 stocks, each up to $2,000, and you could also get 12 stocks from Webull with any amount deposited. And if you guys want, you could check out my Patreon as well. All of those are down below. And now let's just talk about some stocks. Let's break down some energy stocks. I think we got some banks on the list for today, guys, which I believe, if we're just looking at these charts, they're a little bit too beaten down. So number one, we have MPC. Let me pull that up, which you guys have probably heard me talk about it before. This is Marathon Petroleum, and this is down on the day. I mean, today as well, it's getting destroyed. It is down, as I'm filming this, about 3.2%, and now it's officially down from $127 just about 10 days ago. It's down 11% from 127 to now about 113. So it's way oversold in the short term. 10% dump is pretty aggressive for just a couple of trading days here. I mean, it depends on what stock you're looking at. And I guess energy stocks are pretty volatile, so it's not like it's unexpected, but it's put the stock at an oversold spot. Whether we expected it or not, it doesn't matter. At this point, it's oversold. RSI is at 28 on the 4-hour chart, and if I zoom in a little bit, look at where we are. We're right at the moving average that we've held throughout this entire bull market for the most part, and when we pulled back at this point, a couple of days, or not days ago, a couple of weeks ago, months ago, actually, in the end of September, after we saw a sell-off from the middle of August, end of August, buyers came in again, bid this thing up, and obviously it took off. So I feel like I'm not saying for sure buyers are going to come in today or tomorrow or later today. I don't know. But at some point, whether it's at $110, $108, $112. I think MPC, I think bulls are going to come in. I think buyers are going to come in and, continue this trend. This looks very good in my opinion. We just have to let the dust settle, and that might take a little bit of time. Who knows how long that's going to take? So that's MPC. We also have Exxon, which I've talked about before. This is getting hit again. Exxon's down 2.2%, and it is breaching the 180 SMA, which is not the best sign. It is breaking under that point. But if this comes down to 105, 100, you guys can see, that those were resistance points back in early June. We're talking in August, in October as well. I think buyers are going to come in there. It's already pretty oversold. It's at 32 on the RSI. 103, 102, 105. That's where I'd be watching for a rally on Exxon. Maybe it doesn't go back to recent highs or to all-time highs, but it could have a couple dollar move. Maybe it goes from 103 to 108 or 110 again or something like that, right? We could end up playing that. And Chevron, excuse me, guys. Chevron is also one that is getting pretty oversold. It's at 36 on the RSI here. It is down 2% on the day. It's at roughly $178 a share. And you guys can see this one's not yet breaking under the 180 like we saw with Exxon on the 4-hour chart here. But it's right around the 180. And who knows? Maybe at this point, buyers do come in. We get a little relief rally at 178. That's possible. Or it breaks 178, which I might as well say, or maybe 177. We're already under 178. I'll put my alert at 177. Mark is at or below. If we do break that point, now we're talking maybe a sell-off down to 168, 170, where that'd be even way more oversold. And, that could potentially be a spot where Chevron is attractive as well for maybe a bounce back, a relief rally type of play, something like that. So let's see what happens at 177 here moving forward, probably for the rest of today and tomorrow. That's going to give us obviously some more price action, and we'll get a little bit more understanding of what the stock wants to do. So that is CVX, and we also have some banks right now that are getting pretty beaten down. JP Morgan on the day is down 2.5%. It is now breaking under a point that I mentioned a couple of videos ago. I forget exactly when. As you guys know, I make a ton of videos here on YouTube, so I can't really point exactly to which video I made or where I talked about this recently, but it was within the past week or two. And you guys can see, right, with today's move, we're falling under the highs from the beginning of June, being about 133. That was also support from about a week or two ago. So we fell under that point. It looks like a falling knife. I think JP Morgan has a little bit more to go on the downside, probably to about 125, 26, right around this 180 SMA, and that is where I'd be looking to pick some up for a trade, right around this point, right here. If it were to come down another couple bucks, $3, $4, $5, JP Morgan would look very interesting, at 125, 126. And BAC, and this is all my opinion, guys, from my perspective. You guys can't do anything, or you shouldn't do anything based on these videos. This is just from my perspective. So Bank of America is also looking pretty decent. Well, not as good as JP Morgan, but it's oversold. Let's put it that way. It's more oversold than JP Morgan. I'll tell you that. And it's a falling knife, so keep that in mind. Who knows when this is going to bottom out or when the dust will settle, but at some point I think it will, and we will get some sort of relief rally, whether it's low 30s. We could be going down a little bit more for all we know. I mean, looks like they just paid a little dividend. Maybe it goes down to this 32 level that I have drawn, maybe 32.50, or maybe it comes down to this point right here, 33.50, if you guys see that. So Bank of America is one that, yes, it's a falling knife. Yes, it's dumping like crazy right now, but it's one that I think we're going to get a little relief rally on, whether it be here at 34.80, 32.50, 33. We shall see, guys. So JP Morgan and Bank of America, watching those for sure. Now the last one, maybe it's not technically overbought or oversold rather, but it's breaking out completely. It's Boeing, ticker symbol BA. We actually recently called this one out as well, as it was trading under 178, 180. It was kind of oversold at that point. Now it's actually breaking out. So we took out 178.80. Now we filled the gap pretty much entirely to 188, which you all can see here. If this wants to work, come on. This was the high from back in the end of April. You guys can see right around 188. So we filled that entire gap. Now the $1 million question is, are we going to retest that point, break out of it, and then fill the gap to 195, 198? Maybe from there we start going 200 plus. That is the $1 million question, guys. So overall, those are a couple of stocks that I'm looking at. A quick breakdown on what's going on in the markets today, and it just doesn't look good. Honestly, it doesn't look good. The markets are kind of nervous right now about, of course, what Powell's going to do. We just got a pretty decent jobs report for November, which means, hey, maybe he's going to do more rate hikes, right? Maybe more 75 basis point hikes than expected, maybe a little bit more. Who knows? I mean, there's uncertainty now about this, and of course, the stock market does not like uncertainty. So we'll see. I mean, I'm not obviously freaking out or doing anything crazy or selling out of everything or just dumping my entire portfolio. I'm just playing it day by day, playing it by ear, and that's the way I've been doing it throughout this entire bear market, guys. And I'm trying not to get my emotions involved. Obviously, we're all humans. Sometimes we do get emotional about certain things, but I'm trying to keep my emotions as out of it as possible. And with investing and trading, you got to. You have to, or else you're not going to do well. That's the reality of the matter. So with that being said, guys, I'll catch you all in the next video. If you enjoyed this one, hit the like button, subscribe, get your free money from Moo, from Webull. Check out my Patreon. All of those are linked down below. My second channel as well, Stocks Talks Money. Make sure to subscribe. I'll see you later. Peace out.